comfortably? Good. Then let's begin. At the recent price action rise and fall, this is the 3-day time frame, so we're actually encompassing quite a good deal of time to draw in this Fibonacci retracement here. I'll just make sure I've got it in the right place at the lower end. What we can see is that we've come on up towards the 1618. That was in at around about 14 cents. And then subsequently, we've retraced back down the way, finding the prices at 11 cents. And all eyes really are naturally drawn towards where our previous high was there for us. And that is, in fact, where, therefore, I'm going to prop a horizontal line, and then I'm going to remove that Fibonacci retracement because we know that that's there. But actually, no, how about I pop in a line up here at the sort of the 2618 as well for the next side of target up the way, and where the 1618 was as well, just so we've got some lines on there already kind of showing us where we are right now. And then, by the way, as you can see, this red line here lines up perfectly with the top end of the Donchian channels, because that's kind of how Donchian channels work. And we can see then that, great, we've had this nice rise up. If we actually want to measure out then in terms of like, where do we not want to see the prices drop down the way at, then we can see that this zone between the 236 and the 382 is obviously fairly crucial for the prices to stay above because of the previous high on there, and because that's where the 236 is and the 382. Now, if we did drop down the way, where would be the ideal place to get a higher low at overall and see if there's any sort of confluences around about those lines on other time frames and with moving averages, etc. I'll just pop this on here at that 618 and remove this Fibonacci. Excuse me if you heard that siren going by outside. I guess it's the Doge police or something. Yeah, right, whatever. And we then were above, and we're above that right now. So great. Okay, so we have had a significant pullback, and by significant, I'm talking to the tune of what's that, 20%, just to get down to where we are now from the highs. And we're still looking pretty good on this one over all, so long as we close above. I know, right? Cheapers, another sort of 30% down. That's just how incredible this rise up has been. So what we're going to see then when we look at this price action, I'll just remove the DC and add on the BB over here, the Bollinger Bands here. You can see, of course, we're positioned wildly outside of the Bollinger Band. And now this has happened in the past because this is a coin that likes to pump. And what we can see here is one of those rare instances where we actually didn't really need to do, you know, any pullback and just got continuation while we actually open and close above the Bollinger Band here. You know, it's actually did kind of retrace close enough overall to kind of call it okay, but this is extremely bullish. Now, will we see some more of that extreme bullishness? It could happen. Let's kind of smooth it out a bit, look down towards the 4-hour time frame and show that, of course, because of this retrace back down to this area, we've found ourselves already back within the Bollinger Band, etc. So the whole how far you need to retrace area has kind of come into question already, and that's actually because as we're approaching the end of the day here with less than 4 hours to go before this, you know, the charts shut up shop for another day, and then of course immediately continue 24/7 world crypto. But we're looking towards that 24-hour close, and that's going to be coming in, bringing this Bollinger Band area up towards that 100 sort of 10-cent zone, which means that any sort of pullback even to 10 cents, and we're at 11 cents at the minute, is you know, completely kind of, you know, stomachable, if you like, for digestible for the prices. So that's where we are right now. We're going to be looking towards the top side with this one, of course, you know, because we're in a really bullish trend. However, we've seen big pullbacks happen. So these pullbacks that have happened in the past have started off, and they've looked along the lines of saying, well, so long as we can do X, Y, and Z, then maybe we'll be okay, right? And it's not necessarily happened. How did that look on the 4-hour time frame when we go back over to our last series of pumps? geez, the police outside need to chill out. Chill out. Somebody phone the police and say, chill out, guys. We saw this big push back into the Bollinger Bands, sideways price action down towards the median line, you know, then up, 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 and everything kind of maintained an orderly direction. Not too bad here, but we did come towards the median line of the Bollinger Band on the 4-hour time frame. So just to kind of put that all into context, if we kind of stay above that median line of that Bollinger Band on the 4-hour time frame, things are looking good. Where's that lining up with? Well, that box that we drew in there. So that's your TA. Now, what I haven't said to you is do X, Y, and Z. Now, I appreciate that, right? Now, there's a tiny little bit left off there, and that's just what it comes down to for you in terms of how you choose to trade. Now, I'm not a financial advisor. None of this is financial advice, but one way of managing your trade, as an example, could be to say that you want to come in here for this sort of profit up there at that higher target. You're looking up towards 30 cents. That's maybe what you're looking at. Now, that's a little bit, let's be honest, everybody out there, it's a little bit of a degen trade looking for 3x, but that's cool because that's why we all got into crypto, right? So then what sort of risk to reward are you looking for example, here on this trade? If you're looking for a risk to reward of, say, 5 to 1, etc., then you're going to have the ability to have your stop all the way down there at 72. We've discussed all of this, so I think you'd have a good idea as well along the way as to how your trade was going. If it had done certain things along the way, maybe you think to yourself, there's other areas that you'd want to manage your risk. Okay, so you're so close now to be able to make your own decision. Now, you might also think to yourself, but hold on, Rocky, there's two ways the market could go, and maybe you want to short it. Well, I'm saying that we're in an upward trend. Fair enough. If you want to short it, then there's a couple of different things I'd like to point out. And I'll just start off by saying that if the prices do manage to then push up past our previous highs, that's obviously, you know, where you're going to be looking at having a pretty rubbishy trade at that point. And then, of course, the risk on this one kind of gets, you know, in terms of where the prices could turn around and then cut you from making any more profits, does increase quite a lot past the point of this line over here. So managing your risk to reward on this one from the current prices right where they are right now is somewhat more difficult from the sort of bearish perspective, but I understand why you would think like that, having looked at the big pullbacks that we've seen in subsequent highs. So let's just sort of sanitize what we're looking at, saying big move up and then another high with divergence. Have we seen the sort of the big move up and then the other high with divergence quite yet? Not necessarily seen that quite yet. So cool, you know, you can remain bullish on this one. So is that enough? I think I've wrung the towel dry in terms of this one, right? Cool. So feeling pretty good about that.